The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva, they've got all the products, the programs. If you have a phone, you can make the call and get rolling to get your new house. If you are one of those 6Ds, and I'm not going to tell you what they are right now, you have to wait and listen for it. Let's see what's going on in the world today, every day at this time. OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 42% of all mortgage transactions nationwide. A lot of green on the screen today. That's not good news. We generally like green on the screen, but not when we're looking at mortgage rates. 30-year conforming rate. Remember, don't have the APRs. I don't know how many points were paid or received. OBMMI doesn't report that part. But they did tell us the 30-year conforming loan was up yesterday, 6.657. Jumbo loan, that was down a little bit, 6.629. FHA, 6.563. Don't forget about the, did I say new FHA loan program that's coming out there with no money down and no mortgage insurance? Did I say that? Don't. If you want to know about it, it's not out yet. It's coming. Let's move right along. 30-year USDA loan, 6.549. That one is up. That's generally for our rural areas, no down payment, and the best loan on the market for those that earned it, the 30-year VA loan, 6.35. Moving along, let's see what's going on today. We'll see where the numbers are coming in. I already told you, 10-year Treasury's up again today, up 2 basis points. Not a whole lot, but it's the trajectory we're watching. S&P 500 is down 9.96. Mortgage-backed securities, they are down once again, 16 basis points. Means interest rates are going up. Why is all this happening? Well, it's partially from the debt ceiling, but it also has to do with the Federal Reserve. And we've talked about the Federal Reserve before.
Idiot.
Yes, I know. Don't go there. St. Louis Fed President James Bullard yesterday says that he wants 2 more rate hikes.
Such an idiot.
Yeah, I mean, it's unbelievable that he can't see what's going on. Even though the chairman of the Federal Reserve expressed that the Fed may not have to raise rates due to the credit stress in the banking system. Oh, wait, did he say a month ago that there was no stress in the banking system? I guess we're not supposed to listen to him. We're going to get the Fed minutes from the last meeting tomorrow. About 11 o'clock California time, Jamie Dimon said he wants to see 6 or 7 more rate hikes. But of course, remember, he's likely talking his own book. The more the community banks go out of business, guess who's buying them? Yeah, it's the big banks. So the more they go out of business, the more stress there is on the banking system. The big banks win. You and I, we lose. And I explained this yesterday if you missed it. The community banks, they can't go to the market to borrow money, although I did hear that Pacific West did just get a little bit of money from the market. But here's the issue. When people are wanting to pull their money out because they don't want to get a 0.5% interest anymore, when they can go and get fed, a 10-year Treasury at, 4 and give or take. So they're going to take their money out. Banks can't borrow money. They can't call mortgages. They can't call the notes on cars. So what do? They sell their mortgage-backed securities and their treasuries, which puts more supply in the market. More supply without the demand brings it down because, the Federal Reserve, they still have all that money, all those bonds that they took back from Silicon Valley Bank that they're letting roll off. Again, I say it. There's a bunch of idiots.
Such an idiot.
And then you got all the sheep. All the sheep, but just every one of them wants to do the exact same thing. Stop that, guys. New home sales measures signed contracts and new homes rose 4% in April. That means if you go from 96 to 100, that's up 4%, right? So there's still not very many of them. 683,000 unit annualized pace. We need 1.9 million new units every year for household formations and obsolescence. March was revised lower, and when factoring in the revision, sales were unchanged from the originally reported number last month. Sales still are at the best number in 13 months. Diana Olek, are you listening? Maybe you'll get it right one day. There were 433,000 new homes for sale at the end of April, and at the current pace of sales, 7.6 months supply, unless we count the ones that are completed. There's only 70,000 of them that are completed, 16%. So if we look at that, now we're down to 1.2 months supply. Median home price fell 7.7% last month. what home median prices are good for, right? Absolutely nothing. Even ask the economists, they'll tell you that. Tells you the mix of properties for sale. Fed survey of household economics and decision making. Who cares? Let's move right along. You're listening. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990. 800-306-1990.